following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. 877-927-6648 is the number to call. Huge move up today. Dow's up 80 at 21,091. S&P is up 10 at 2415, all-time high. Dow's not yet at an all-time high, just to get to 2169. I'll talk about that in a moment. You've got, let me move this away. Here's the 10-minute chart, just gone to a leg D, might be a peak D, short-term, stochastics at 90%, MACD still good. So you would have to see a failure because 24.14 right now, it would have to close in the next 30 minutes under the 24.10 level in the 10-minute bar to start to even see the chance of a pullback. This is really, I must say, a surprising leg G/A in the daily chart and gone above the previous high. The higher we go, then the greater the chance that this is a brand new. I can't believe it. Just got to listen to the market at this particular point because the stochastic has rallied strong to 86%. The MACD is crossed positive, but it really wasn't a particularly strong pattern. The weekly chart, MACD is still not crossing positive, but it is improving. And the 120-minute chart is at 89%. The weekly chart is at 89% in the stochastic, and the 120-minute chart is now in G/C. So let's go to the other indices. Actually, let me do this one at a time. The Dow broke the Chapman wave falling axis resistance. That's been fantastic resistance for weeks and weeks since the 2170 high that was made back in April the 26th. It's tried to test it and made lower highs. Today broke out of that. So this becomes a new leg C to the upside in the daily chart. It says that it could go to at least a D on the upside, and I have to make that a blue C because of the move to the upside. But it is underneath 21,169, the high that was made on the 1st of March. So far, that's your benchmark on the left. What I showed subscribers this morning is that, yes, there is a chance, let me go to the daily chart over here, there is a chance that within the context of the markets, we're looking at this cup formation right here. It's a really unusual cup formation because of the largeness of this arch. That was it that Wednesday? Was it a Wednesday where the market smashed to the downside on the 17th, down to the 20,601 level? And here we are, 700 points higher. And this is still got the characteristic of a single leg A to the upside, but it has to be called leg C. So that's the daily chart. Now let's go to, and there's just, there's no question. I have to say, you know what? The Nasdaq made all-time highs. The S&P then squeaked to a new high. Now it's quite a bit higher than it was, but that 2,402, whatever it was on the left side. Let me go there and we can talk apples to apples. Right here. The S&P up 12.74, broke out over the left side high of 2405.77. But that's not the issue. It was that high that was made at 2,400 on the 1st of May. What's happened is now it is pushed quite nicely above that previous all-time high. I'm calling it leg E. I think we're getting really close to some kind of now I have to say a pullback. I don't know what to call it. But within the context of the market, the MACD and the S&P is it crossing positive? Well, we've got the whole week to go. We've got until Friday. So it is still 46, 47. Yeah, it hasn't yet crossed positive. So we'll be watching this one closely. Now, what's really interesting is that the QQQ is up at 140.86. also breaking that left side high. That's been the leader of the pack. Then comes the S&P. My question has been, and I wasn't sure it was going to do it, within the context of the Dow, I know it's only 30 stocks, but they're really perfectly playing. You might have 5 financials, but basically it's really a very good index now as an indicator. It's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This is the 12th week. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This is the 12th week of the consolidation. Now, we are still, at least at this point, I believe we're still holding the short position. It's a small short position, but it's a short position. It's not long. And I'm looking to see what's going on here. My contention was that when the S&P eventually makes its leg D in the weekly chart, in the monthly chart, with the Dow at peak D already, then we've got to be careful. Then we could actually start to have a much deeper pullback. So let's go back to this, what we're looking at. This is the 12th week, did I just say? Yeah, the 12th week of the consolidation. The S&P has gone to a new high, but look at this. Leg D in the monthly chart. So the IWM is kind of stalling here. It's just had a doji type candle in leg A. I think it's still the weaker of the different indices, and it's only going to see. Does this still have to go to a leg D before we wrap the whole thing up and we have a much bigger consolidation? I don't know if it can do that. I really don't. Okay, so that's within the context of the IWM at 138.21, up 71 cents. It's got to go all the way to 141.82 to break to a new all-time high. Let's go to the, I'd like to go now to gold. Gold is up 3 at 12.55. A little triangle forming here. I think gold is kind of stuck in a range, and until it can break into the 1267s, it really needs 1272s. Once it gets there, I can say, great, the weekly chart has now improved a lot. At this point, the weekly chart is still in this chop, chop, chop sideways action, just trying to consolidate those big gains that it had going into April. And silver's the same thing. Silver SI, at this particular point, 17.18. Yeah, it's a little bit stronger chart-wise in the daily, and it needs to get above 17.305. That starts leg C. So it's a little bit better scenario there. Let's go to TLT. I think this is going to be the clue. The TLT at 122.97 down 26. If it takes out the high that was made back on May the 18th of 123.94 and starts leg C, I think that's going to be telling us that rates are actually going to go down. The Fed's going to be nervous, and the market has started its consolidation. Right now, it's just a rotational consolidation. I think when the next pullback comes, it won't be a consolidation. I think a lot of indices are going to go down together. We'll wait for that to happen. So that's the TLT. Crude oil, I think it's made a peak D in the daily. A leg D, and should be a peak D. It's at 50.78, down 57 cents. Leg D almost hit the 200-period moving average resistance on the continuous contract. I think it's going to, if crude oil pulls back under 49 in the next 3 days, I think that's it for now for crude oil. And we'll be back. We'll be looking at the dollar. Let me just show you the chart of the 10-minute. 10-minute, as I said before, it's made this leg D, and I don't know if it's going to make a peak D right here, but we'll be watching it real closely. Basil Chapman, Tiger Conditions. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So the dollar is sort of testing its lows. It's at 97.17, down 7 cents. They see to the downside in the weekly chart. And that pattern with the peak D, if the month of May closes like this, I probably will have to put a down arrow for the dollar to say that the monthly chart is going to a sell signal, sell mode upgrade almost in 1 month, because it broke under the 9-period moving average. It's really testing important level, 97.18. There's a good chance that it's going to have to go to the 95s for the real test of any internal support. But what's really interesting is that gold it's held well, but it hasn't really broken out. And that's really what I want to see, if there's going to be much deeper consolidation in the dollar. Let's go to the euro, EUR USD currency pair. Peak E right now, holding steady up at the high level. MACD is good, stochastics at 87%. Just a hint that it could, at 1.1217, it could be pulling just down fractionally. It could touch the 1.114 9-period moving average support. We're going to watch that closely as well. Why? Because this is a very successful lowercase h to a lowercase m double bottom pattern that successfully has the technicals improving after it took out the left side low and went right back to close above that left side low. And that's the low that was made in the euro dollar currency pair back in March of 2015 at 1.0461. It did break under it. It went to 1.033, but both months, that was in December and January, December of last year and January of this year, it closed above. And that suggests that there could be a rally that touches or maybe even pierces the left side high of importance. In this case, it's November at 1.129, And wow, if it takes it out, it can go all the way to the 1.1615 high of May of 2016. That's just what this pattern does when the M, lowercase m pattern, is successful. Okay, just a real quick look here. Okay, I don't know if we've recycled to the upside in the 2-minute chart, but it's a peak E, and the stochastic did cross positive and the MACD did cross positive, but at much lower levels. Going to be watching this closely. Let's see what the 10-minute chart is doing. Just a short-term basis. It's still at a peak D. We'll see what happens. But I must tell you, when any index gets really close after a period of time, especially in a cup formation, to the left side high, the lip on the left side, it really does try to test that old high. So I didn't expect that. I thought we were going to make an arch formation and then come back down. So now let's look at high-grade copper. High-grade copper is at this particular point, if I can find it right there, at HG. Gone to leg E. So copper has actually done quite nicely. After the D, you usually expect some kind of a pullback. It did get the pullback now in 3 days. It's gone to a leg E. But this is one of the quickest peak A, peak B, peak C, peak D, leg E that you can get in this particular pattern. Look, every other day made a new high. And then D went for a little while before it had 2 bars, and then 2 bars correction, now the 3rd bar. So I'm watching this very closely, because if high-grade copper by Monday is slipping under 2.56, it's at 2.60 right now, that'll say, uh-oh, short-term top, and you've got to watch that weekly chart very closely. A couple of things I was asked about. XRT, that is the this is the S&P Spider Retail. It's not my favorite because it really has just a limited number. It has Groupon, Gap stores, outerwear, I think it's called. It's got Francisco. It's a dress. It's a apparel, women's apparel. TKS, Donna Karen, I guess. SHLD. That's Sears Holdings. DCS, the shoes, Burlington. That's the coat company. So it's really not a good a marker for me. I use it, but really it's just too selective. It's making an H pattern. It's having a terrible time trying to bounce today, but it made a peak F top, pulling back very sharply. But if you go to the RTH, and that's the Market Vectors Retail ETF, that's different kettle of fish altogether. Walmart, Home Depot, Amazon, CVS, Lowe's, Costco, McKesson, Target, TJX, I mean, just some of the best. BBY, which had a spectacular day today. Unfortunately, Staples is having a tough time. So the RTH, because I believe BBY is spiraling up to, yep, look at that, up 8.95, up 17% to 59.39. I did the show, for Larry's show, just a little while ago, an hour ago, with Tommy O'Brien, Tommy Jr. We had a real good time, we always do. And I was looking at BBY. And I remember I had a caller months ago, maybe 5 months ago, and I said he wanted to look at BBBY, that's Best Bar, Beyond Bath, Best Bath, whatever it is. And I said, I don't like this. There's too much competition there. But if you want to drop a B and go to BBY instead of BBBY, then I think you're looking at something very different. You're looking at, it was way back, somewhere over here. And I said, this one looks to me like, both on a fundamental level, because I know I go there to check out what products there are. And usually I do actually, I will buy there. I don't buy much, but I will buy there rather than go to Amazon. And at the same time, I think a lot of people are using it. Well, it turns out that it made a peak F in the daily. It went sideways. It didn't use up. It used time rather than price. It was a peak F/C in the weekly chart, and was a D going to a leg E in the monthly chart, which said, hey, you better be careful. Out of the blue, the earnings come out, and look at that ugly candle from yesterday. People were bailing out 7.9, 7.9, almost 8 million shares. It was one of the high-level volume days, and people were getting a little nervous, and look what happens today. Spike to the upside. Everything technically was saying, oh, weekly's okay, but the daily's not that good. And then bam, it spikes up. Tough market this. Tough market because you could be right and just get stopped out and then things turn around, or you can be wrong and not rewarded. Sometimes it's nice to be wrong and rewarded. So if anyone got out, I don't know what you do now. You're stuck because you don't want to be buying it up here yet, because it's shown that it can produce the goods. It means that there's a good chance it'll go a little bit higher, maybe to the 60.80, 61.30 area, and then maybe pull back, and then maybe not even close the gap for a long time. This is tough. So BBBY acting very well at 59.67, up 9.25. Then the next question I had was I did that. Okay, and then then there was a question about deer. Would I be considering, now I'm going to get this exactly right, because the question was, Basil, is this a good spot to enter DE? Thanks. So, I don't know whether he meant enter as a short or enter as a long. I'll talk about that, because, if you were buying, every day that I've spoken about it, if you're buying Bitcoin, at any point, Bitcoin was a buy, right up until early this morning when it hit 5.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, and we're going to go straight to Carlos in Garden Grove, California. Carlos, how are you?
Very well, Mr. Basil. How are you?
I'm very well, thank you. So, you'd like to look at
Yes, the DAX. I usually listen to Mr. Pesavento and his analysis. I missed him today, and practically, I would like to hear your opinion about the DAX. I noticed last night was it was positive. He got a reversal and kind of tried to get this morning a little bit positive, and then we have, at least in my delay data that I have for the DAX, it looks like it's a little red right now. Can you comment on that?
So, can you tell me what do you have for the price of the DAX at this point?
Right now, my delay data shows 12,616.
12,616. Because I've struggled for a while to try to get the DAX. I don't know why they don't have it. Maybe they do have it, but every time I've called, nobody's been able to give me the symbol on TradeStation. Years ago, I used to get them all. I used to get them, and I love doing them all the time. It's just as well I don't get it because it would make it even more complicated. But I do have the Dow DE. This is $DE. DOW, and that's called the Dow Jones Germany Stock Index. Now, I remember checking it out. I remember checking it out some time ago, maybe a year or so ago, with the actual price of the DAX index, and I think it's very close in chart formation. For instance, if I go to EWG, which is the it's the iShares MSCI Germany ETF, that has a slightly different pattern. So I'm going to do them both at the same time because I'm really impressed about what's the longest data time frame that you can have. Do you have a monthly at all?
No, I only see the ticker on that one because I don't have any. Yeah, I use a website where it shows delayed data for all the markets around the world.
Okay, so
yes.
So you can see the chart on the shorter term, like the daily chart. Is that right?
No, I don't see any charts on that.
Oh, you've got only the price. Okay, so let me ask you the question: what are you doing with the DAX? Because I've got one that I think I can use these for parameters.
I normally use it as a gauge, Mr. Basil. Right now, I'm shorting the indices, and I try to follow the DAX based on the tradition I have with Mr. Pesavento.
Right.
He analyze it, and then I can gauge pretty much what my indices tend to do during the day.
Because, so which index are you using to short?
Well, I'm shorting right now the S&P, the NASDAQ, and the small cap.
So when you say right now, are you in the position or you're just about to put the position on?
No, I am in the position. I placed it a few minutes ago, and I'm not positive. I have a small loss, but I have my stops certain level above the high of today.
Okay. So let's do this. If you don't mind, I'm going to say, because I'm not sure which data I should be using on the DAX, the one that I'm using, the Dow Jones DAX, Dow Jones Germany ETF, is suggesting that it's got a failure pattern. It didn't make a new high. I don't know if you can tell me whether you made a new high in the DAX today, but mine says it's underneath the previous high. And if I'm going with that one, the EWG is at a high, so I don't want to mix things up. What I will say to you,
it seems like the high of today, at least last night, was 12,708 on that specific data that I have here.
Okay. So let me do this because I want to just explain to you what I'm looking at. From yesterday afternoon into how can I put it? Yesterday afternoon into this morning, just before the futures opened, I was very impressed with what was going on because I did not expect that sudden surge yesterday afternoon. And at the same time, I'm looking at it and I'm saying, there are a couple of things here that's just not right. And now I'm going to explain to you why I think that you might be a day or so early, but I think that this is going to be rewarded. Let me explain what I'm looking at. In the 120-minute chart, I might have got an instant restart in the 120-minute S&P chart, but the MACD is very strong. It's good. Stochastic staying at 95%, but my on-balance volume, that's the way I use volume, is right at an area where it says it's about to pull back. How deep I can't say, and that will impact the S&P. But here's the real thing. When I go to that, I was going to get to it earlier, but you've given me an opportunity. When I look at the VIX index, the VIX is trading up 13 right now at 10.16. The low of the day was, in fact, 9.80. And yesterday's low of the day was 9.88. So wait, we've got this huge move up in the S&P, etc. The Dow is not a huge move, but it's a big move, up $70. And yet the S&P wasn't able to affect what is based on the New York Stock Exchange. So let me just go to the New York Stock Exchange, NYA.X. And that's in leg D. Oh, that's in leg D in the daily. But it's very close to the 11,687 high that was made the week of the 3rd of March. So 1166. Oh, it's only 66. It's 28 points away from an all-time high. So this is what I've been saying. If we are going to go, NASDAQ makes a new all-time high. The S&P takes 10 weeks, and on the 11th week, it squeaks to a new high. And this is the 12th week, and it's pushing that new high, but not by very much, but it is making a new high. The New York Stock Exchange has 28 points to go. It could do that in an eye blink, but it's struggling. It's in leg D in the daily. The Dow now only has 70, how many points? Let me see. 21,000 was the high, 21,112. Has about 50 or 60 points to go to make an all-time high. I'm thinking we are really close to some kind of confirmation as the domino effect, just because each one, and maybe the Dow will actually fail and not make 21,169. I'm looking at this and I'm saying, I cannot imagine how the volatility index so low, and at this, what I said to subscribers this morning, in the 9s, that's where we've seen some real nice bounces in the VIX index in the last few weeks. That's been the key, that every time it gets into the 9s to test the 20-year lows, it starts to have a bit of a bounce and the market pulls back. So I'm looking at this and I'm saying, I don't want to sound like I'm so stubborn. I'm not going to give in. I want to be short and I don't care what, but I'm going to remain on the short side of the Dow. And I'm looking at this and I'm saying, I don't see how we can break out to a brand new buy mode in the indices when the VIX is way down at the bottom. You could rotate and go into some new stocks, but I'm kind of in your camp. I'm looking at this. You want to hold on a moment?
Sure. Thank you. Thank you very much.
Okay, great. I'd like to talk this through with you. It'll help me. Maybe it'll help you. So we're on with Carlos, and we'll be right back. Basil Chapman, Dow's up 62, S&P's up 9, and we'll be right back after these important messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. We're back. Here's the 10-minute chart that peaked in. The 10-minute chart was, in fact, I've got a down arrow. We'll see what happens. I can just tell you this, that if the market gives back a chunk of what we've got here by the end of the day, it's going to be an important barometer. Let me get out of this, and I just wanted to tell you that, Carlos, I did get on stockcharts.com. I went and I just wanted to check out the DAX. And the DAX looks exactly like the chart that I have here of the DEDOW, in the wrong place. And so that tells me, so now I can do this for you, DEDOW, and I can say that the high that was made on the 9th of May, mine's 424, yours is completely different. It'll be up in the 12,000, whatever it is. But that recovery high that was made there tells me, with the pullback that we've got with 2 lowercase h patterns forming, I call them the dreaded H's, that you're absolutely right, that there's weakness. It's under the 9-period moving average for the 1, 2, 3, 4, 5, 6. This is the 7th day that it's closed under the, well, it hasn't closed yet. I think it must be almost closed, under the 9-period exponential moving average. And I'm with you. And what happens is, if I look at my weekly chart, this is a doji high with a peak F. So if you want to use the DAX as not just a benchmark, but just to eyeball it and say, hey, that sometimes is a bit of a leading indicator. What is it doing? I'm with you right there. So now let me just go back to the S&P, and I'll explain what I'm looking at in a little bit more detail. In the S&P, this what I call has the characteristic of a single leg A, but the single leg A has to first of all activate the previous high, which in my case was what's called a peak F, the 6th highest peak. So this goes G/A. So it says G is, wow, be careful, because the next pullback could be really sharp. And A says, wow, any pullback you want to buy. I hate when you've got, either it's bullish, very bullish, or very bearish. I say, you know what, forget about that. It's numbers I'm looking at. And if the S&P in the next week and a half closes underneath 2392, that's not that far away, 20 points, not a big deal, 2392, yeah. And it's at 2413 right now. That'll be about 200 down points lower. I'm telling you that this is a very unusual chart pattern. It has a characteristic of what I call the right arm extension, where it's like in a sense, like a rogue wave. the technicals, one of the technicals was absolutely not confirming what one of the technicals was doing, and the stochastic area is at 84%. That's good. But the MACD is just crossed positive, and it's way weaker than it was before. And it's almost as if you're looking at volume, and volume hasn't been confirming. And Dave White's been talking about volume. Tom's been talking about volume. Volume on this run has not been all that strong. And you would expect that if you're going to new highs, you want everybody to pile in. I'm in the camp that says I have to stick with the technicals, and my technicals are just continuing to say consolidation for 11 weeks. This is the 12th week, continues. The Dow hasn't made a new high yet, and even the new highs have been kind of almost reluctant. That's just my stance right now. So I think you're right. And you say, what kind of stop do you have on the S&P?
My stop is at 24.25, 24.20.25.
So that's about a 8 or 9% risk, right?
Practically, I got right at around 24. Let me see the price. 14.
Oh, okay. And right now we're at 24.12. You might have to do this twice. This will be maybe the first time. Maybe it's going to stretch into, because of sometimes during the Memorial Day weekend, the close of the long weekend, there's a bit of a rally in the market. It happens periodically, and this is one of those cases. So from my eye, I think you're going to be absolutely right. And if you are stopped out, I wouldn't be surprised. It's one of those cases where you were just stopped out, and almost immediately that would be the entry point for another position. But I think that having a stop the way you have, I think is correct. My 120-minute chart says that the on-balance volume is signaling that if this is a peak F top with a high today of 2417.58, we'll know, because by the end of the day, the S&P will only be up maybe 3 points, and the Dow will be up only 20 points. And the S&P, if it can close in the next 2 days, 2 sessions, underneath 2404, I think you've picked a really good place to go short. That's the best I can do.
One more thing, White. I'm sorry, Basil. I've been stopped out like 3 times already trying to short this indices yesterday. And seems like every time they hit my stop, they just came back down. And it gets a little frustrated, but I'm not really looking for confirmation before the short. I'm just trying to use my stop as my insurance in case it goes higher. And 3 times already, I've been able to break even on my pretty much on my losses at this point right now. So hopefully, I don't want to use the word hopefully. I expect that eventually my stop will be, I will be able to pull it back.
Hold.
Yeah, pull it back to my break-even point, because it seems like that way I'll be playing a little bit safer. But I'm going to let it go down if it goes down a little bit more before I do that.
Okay, so here's the other thing. You keep using your technical aspect, because you don't want to be stubborn emotionally just to prove a point. Yeah. You want to be looking at it and be kind of convinced that, for instance, I'm looking at the MACD in both the Dow and the S&P, and so far in the weekly chart, it hasn't crossed positive. And that says to me, got to be careful, because if it deflects lower, and that'll happen if there's a reversal and it goes negative today or Monday, and not just negative, it has to actually pull back. The S&P must be like a -8 in the next day or so. Then I think we're looking at something that says upside now is really limited. But in the meantime, you've got to have stops. You don't want to be putting in positions and just say, you know what, that's my position. You've got to have a stop, because, as you say, if it goes higher in this market, because people are forced to cover and people are looking at, they've missed the move and they say, no, this is it, I better get in, it could go higher. So you really have to have your stop. And I think you've done the right thing.
Thank you very much. I really appreciate your opinion. Your comments. And I really want to thank everybody in TFNN, Tom and Tommy and all the guys. Thank you very much again, and have a great weekend.
Thank you. You too. Thank you, Carlos. Always appreciate the call. Carlos in California. Let's go to Tim in Denver. Tim, how are you? Hello, Tim. Oh, he's gone. So sorry, Tim. Tim wanted to look at the IBB. I'm sorry you couldn't hold. Just wanted to finish up with Carlos there. So the IBB is at 291.02, down 14 cents. This is the biotech. This is the NASDAQ biotech ETF. And it's just been trading in this band. I've had it on my newsletter for ages. We had a fantastic, we called almost the top back in July of 2015, ran it out for 111 points and then got out. And just watch it chop, 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 up and down, up and down. So I just have it there to give parameters. And all I can say is the IBB at this particular point, it looks to me like it's preparing to do a test of the 286 level. Now, the timing to get there, 5 points down, but if it breaks those 5 points, gets even lower, that's going to be very important. I'll talk about the IBB when we get back. Basil Chapman, Tiger Conditions Hour. Dow's at 57, S&P's up 9. I'll be right back after these important messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So let me just do this real quickly. The IBB, I'm just going to say, Tim, if you're thinking of shorting the IBB, Dow's up, S&P is up, IBB is down 16 cents. It's making lower lows and lower highs. If it was at the high of the day right now, I'd say you have to be careful because it could try to tackle the left side high of 294.74 made on the 22nd of May. You know what I'm going to suggest, because I know I don't know. I'm pretty sure you were looking to say, is this the time to be shorting the IBB? And I'm just going to say to you that if you wanted to start, I would not do the 2 times short. I would be looking at starting a short position on the stock itself, on the ETF. It's at 291. I would just start a small position at 291 right now, and I would have a stop for the next 2 days. If it's not taken out, stop of the high of the day of today, 293. I'd give it, it's a 3% risk, so give it 294. Just a little more than a 1% risk. And the reason why I say that is that the MACD is very poor. It's trying to turn up and it can't. Stochastic's at 26%, and I think it's going to go down to the teens. So I'm going to say, yes, you could start a small position here, but we need to follow up tomorrow and Monday. Okay, that's number one. Number two is John just emailed to say, I'm holding the June 28 calls on MU, that's Micron Technology, and I wanted to know your analysis as I'm able to listen to the program today. I have a nice profit and was looking to sell off some of the position and hold the remainder to see if this run can get to $30. What are your thoughts? Thanks, John. John, I'm just going to say to you, please take exactly, your plan was perfect. Take that off. I'm also going to suggest, because this pattern looks so much like the Dow, just missing the most important left side high. I'm just going to say to you, take a little bit more than some. I would take more than half off. In fact, I'd probably take 2/3 and leave the other third. And I think it's going to be tough for Micron to get to 30 unless there's a turnaround. Now the Dow's only up 50 and the S&P's up 8. I think this might turn out to be turnaround day. I don't know. I'm just saying, based on my work, based on other things, based on the VIX, based on the SMHs, etc. So I'm just saying to you, I think this double top pattern at 29.87. So take off 2/3, keep the 1/3. And what I would do is if Micron tomorrow spikes above today's high of 29.66, I would consider taking your profit and saying, you know what, fantastic. If it goes higher, that's great. But it's the risk reward right now in the SMHs and the semiconductors, I think is starting to increase more than I've seen it before. The next question I had was, Deere, would you be buying it? No, I'm not sure if Tim wanted to buy it. I would actually be looking to short it right at 122.58. It's had a spectacular run. I think it's running out of energy. Now, is it a short that goes all the way back from 122 down to 117? I'm not sure. But if anything, I would not be buying it. I'd probably be waiting to buy and waiting quite a while. My thinking is that Deere at 122.59, an all-time high, should be pulling back, and it should be pulling back towards the 119 to 117 area. So I'd be looking more towards the sell side or the short side, but with a 1-point stop. But I would not be doing the buying right now. You have to wait for that. So let's just do this real quickly. The VIX index, I don't know where it is right now. VIX index is right at this moment. The VIX index is at 10.11, up 9 cents. Something's going on here. People are starting to buy insurance. It's got that A pattern, the Eiffel Tower, straight up, straight down. If it doesn't take out the 956 low, there's a chance that this is trying to form some kind of a base here. I'm watching this closely. We must be within days of some kind of a pullback, surely. But that's my thinking. I'm going to stay with that thinking based on the technicals. I am impressed that the NASDAQ went to highs, the S&P went to highs, New York Stock Exchange is almost at a high. So I can't deny that it couldn't happen, but I think we're getting real close to some kind of a deep pull. Basil Chapman, back at Technicians Hour. Have a great day. I'll be back with Tom later today.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.